1938, Fannie Mae is founded by the government under the New Deal. It is a stockholder-owned corporation that purchases and securitizes mortgages in order to ensure that funds are consistently available to the institutions that lend money to home buyers. 1968. As part of the Housing and Urban Development Act of 1968, the government mortgage-related agency, Federal National Mortgage Association, Fannie Mae, is converted from a federal government entity to a standalone government-sponsored enterprise, which purchases and securitizes mortgages to facilitate liquidity in the primary mortgage market. The move takes the debt of Fannie Mae off the books of the government. 1977, Community Reinvestment Act passed to encourage banks and savings and loan associations to offer credit to minority groups on lower incomes or owning small businesses. Beforehand, the companies had been engaging in a practice known as redlining. 1980, the Depository Institutions Deregulations and Monetary Control Act of 1980 granted all thrifts, including savings and loan associations, the power to make consumer and commercial loans and to issue transaction accounts, but with little regulatory oversight of competing banks, and also exempted federally chartered savings banks, installment plan sellers, and chartered loan companies from state usury limits. The cost of a new home in 1980 is $76,400. 1985 to 1991. Savings and loan crisis caused by rising interest rates and overdevelopment in the commercial real estate sector, exacerbated by deregulation of savings and loan lending standards and a reduction in capital reserve requirements from 5% to 3%. 1989, 1 month drop in sales of previously owned homes of 12.6%. Financial Institutions Reform, Recovery and Enforcement Act, enacted, which established the Resolution Trust Corporation, closing hundreds of insolvent thrifts and moved regulatory authority to the House of Thrift Supervision, required federal agencies to issue Community Reinvestment Act ratings publicly.
ABC, this is World News Tonight.
Sometimes failure can pay very well. A House task force overseeing the savings and loan bailout heard testimony today that some officials at failed S&Ls are being paid very well by the taxpayer. Here's ABC's Sheila Cast.
1992. Federal Housing Enterprises Financial Safety and Soundness Act of 1992 required Fannie Mae and Freddie Mac to devote a percentage of their lending to support affordable housing, increasing their pooling and selling of such loans as securities. Office of Federal Housing Enterprise Oversight were created to oversee them.
Thank you, Ms. Hill, for sharing that information concerning the current standing of the housing market and the minority ownership. I think that we all can agree that we needed to hear that today.
Yes, we did.
And
wonderful job.
We do believe that we're going to take some action on this. Does anyone have any comments or any questions?
I do. Based on the presentation that we just heard and the election coming up, we need higher approval ratings. I suggest that we expand the home ownership and the American dream to all Americans.
How do you propose that we accomplish that, Senator?
Well, I propose that we deregulate Fannie Mae, Freddie Mac, and the FHA, allow lower credit, lower income borrowers, and minorities to qualify for these loans. I think we should require a certain percentage of the Freddie Mac, Fannie Mae, and the FHA's portfolios to be dedicated to these minority homeowners.
Not that I disagree, but don't you believe that we could create a serious situation with that?
No, I don't. I think it would help our economy. I think it would grow our construction business and infrastructure, and I think it would be good for everybody.
Well, I think the committee will look into that. Thank you for your input, Senator.
Can I get a motion? Second?
Second motion.
All in favor?
Aye.
All opposed?
It is indeed a very troubling report, but it is a report of extraordinary importance, not only to those who wish to own a home, but as to the taxpayers of this country who would pay the cost of the cleanup of an enterprise failure. The analysis makes clear that more resources must be brought to bear to ensure the highest standards of conduct are not only required, but more importantly, they are actually met.
Through nearly a dozen hearings where, frankly, we were trying to fix something that wasn't broke. Mr. Chairman, we do not have a crisis at Freddie Mac, and in particular at Fannie Mae, under the outstanding leadership of Mr. Frank Raines.
And as well as the fact that I'm just pissed off at Ophelia, because if it wasn't for you, I don't think that we'd be here in the first place. And now the problem that we have and that we're faced with is maybe some individuals who wanted to do away with GSEs in the first place, you've given them an excuse to try to have this forum so that we can talk about it and maybe change the direction and the mission of what the GSEs had, which they've done a tremendous job. There's been nothing that was indicated that's wrong, you know, with Fannie Mae. Freddie Mac has come up on its own, and the question that then presents is the competence that your agency has with reference to deciding and regulating these GSEs. And so I wish I could sit here and say that I'm not upset with you, but I am very upset because, you know, what you do is you give, you know, maybe giving a reason to, as Mr. Gonzalez said, to give someone a heart surgery when they really don't need it.
In addition to our important oversight role in this committee, I hope that we will move swiftly to create a new regulatory structure for Fannie Mae, for Freddie Mac, and the Federal Home Loan Banks.
This hearing is about the political lynching of Franklin Raines.
There is a very simple solution. Congress must create a new regulator with powers at least equal to those of other financial regulators, such as the OCC or the Federal Reserve.
What would make you, why should I have confidence? Why should anyone have confidence in you as a regulator at this point?
Sorry, Congressman. OFAO did not improperly apply accounting rules. Freddie Mac did. OFAO did not try to manage earnings improperly. Freddie Mac did. So this isn't about the agency engaging in improper conduct. It's about Freddie Mac.
And we passed Sarbanes-Oxley, which was a very tough response to that. And then I realized that Fannie Mae and Freddie Mac wouldn't even come under it. They weren't under the 34 Act. They weren't under the 33 Act. They play by their own rules, and I'm tempted to ask how many people in this room are in the payroll of Fannie Mae, because what they do is they basically hire every lobbyist they can possibly hire. They hire some people to lobby, and they hire some people not to lobby so that the opposition can't hire them.
1997, mortgage denial rate of 29% for conventional home purchase loans. July of 1997, the Taxpayer Relief Act of 1997 repealed the Section 121 exclusion and Section 1034 rollover rules and replaced them with $500,000 married, $250,000 single exclusion of capital gains on the sale of a home, available every 2 years. This encouraged people to buy more expensive first homes as well as invest in second homes and invest in properties. November, Fannie Mae helped First Union Capital Markets, Bear Stearns & Company, launch the first publicly available securitization of CAR loans, issuing $384.6 million of such securities. All created a Fannie Mae guarantee as to timely interest and principal.
Hey, baby.
Hey.
How are you today? Good, good. So, just got this letter here, and it's saying that we could possibly get approved for a house for $100,000.
Let me see that. How much?
$100,000 on a house there. Get approved for it.
Can you believe that?
I mean, they sent us a letter. I think it's worth a try.
Yeah, but how legit can it be? I mean, we tried to get the car and we're not even approved for it.
I mean, the only way to do it is just get
What's his
Taylor
name? Taylor Thanos?
Taylor Thanos. Just give him a call.
Alright, we can try it.
Yes, yes. May I speak with Taylor Thanos, please? Well, my name's Joshua Akins. My wife and I we received a letter in the mail from him, and he gave us his contact number. We were very much interested in setting up a meeting with him. Really? Come see him tomorrow?
Wow, that's quick.
Okay, all right. Well, thank you so much for your time.
What time? Ask him what time.
What time? What time? Oh, 4:30. All right. Well, thank you so much. You have a great day.
You're not like a little nervous about
I mean, it was just that fast. I called him and his secretary set us up a meeting, so.
Alright, let's do it.
All we can do is look.
Yeah.
All we can do is
I mean, it's not really gonna happen.
What you cooking tonight, girl? What you cooking?
Remax, this is Taylor. All right, great. Sounds good. Yeah, it's a perfect time to buy right now. Let me ask, have you guys been pre-qualified yet? Okay, no problem. I can put you in touch with my girl Jennifer down at the bank, and she can get you qualified. How's your credit look? Don't worry about that. We don't need good credit. We can get around that these days. Do you both have a job? Perfect. Then we're in. Let me set you up an appointment with Jennifer. We'll get you pre-qualified, and then we can go out shopping. All right, thanks a lot. I'll be in touch.
Well, hello. My name is Jennifer Simmons. I'll be your mortgage loan officer today.
Joshua Akins. This is my gorgeous wife, Kimberly.
Hi, nice to meet you. It's nice to meet you guys, too. Tell me a little bit about yourselves.
So, we got the letter in the mail.
Yeah. Pretty much.
Yesterday, and we saw that we could be pre-approved for a home, and we're living in an apartment right now, and we have a child already, and
little girl.
she's hoping to have more babies.
At least 7 more.
Oh, wow.
So,
that's awesome.
So, yeah.
We definitely need something bigger.
Well, you came to the right place and to the right woman. I believe in getting people in their American dream homes. So, your real estate agent, Mr. Thanos, sent over your paperwork. And what we have here at Bank of America is an underwriter software. So, we put in all of your information to kind of get an idea of the house amount that you can afford. But kind of tell me, what are you kind of looking to buy and afford right now?
Well, we were budgeting the other day, and I think we both agreed somewhere around $800 would fit in
we
our
can
budget.
afford $800 a month.
Oh, wow, that sounds awesome. So are you looking at a $100,000 house or a $150,000 house? Kind of give me an idea.
Well, I would really like to stay within our means, but
whatever.
She wants more kids, when her mother-in-law comes, so we want more space so we can put her on the other side of the house if necessary.
I don't want to buy a house and turn around in 2 years and have to buy another one. So whatever would fit that 800 range would be good for us.
Well, that sounds good to me. Our software came up with the fact that you can afford a $300,000 house on a 30-year balloon mortgage, interest only. How does that sound?
Oh my God, that's so awesome. I would have never thought we would be approved for that much.
No.
Are
you absolutely? I'm excited, but are you certain for $800 you can get a $300,000 month?
Of course.
And that'll fit in. Like, how long is the $800 a month though for? Is that a fixed rate or?
It will be a fixed rate until our rates change. So you won't look in a deviation of more than $50 or more, just depending. A month.
Okay, so it's not really a fixed rate, it's like a variable rate?
It's a variable rate. And what we can do is we can work out with our underwriters, if you are interested in this deal, once you go look for the house, we can kind of get you maybe a 5 or 7 year $800 a month payment. How does that sound?
I think that's awesome because she said give or take $50, so it might even be less than $800. That sounds awesome.
Whatever makes you happy, sweetheart. Whatever makes you happy.
I'm ready. I'm ready to go
Are you
get some
sure?
houses. Mm-hmm.
Well, I will make sure that all the paperwork gets over, and as soon as I contact Mr. Thanos, I'll let him know that y'all are really excited and y'all want to move forward.
He was the one on the letter. Oh,
He is really awesome. I have seen him find the best homes for all of my clients, and they've always been so happy. So if you're looking to have 7 kids, I mean a $300,000 house, I mean...
7 more.
7 more. You already have one already.
We have a little girl.
And you know, you don't want your children sharing rooms or anything. So, it was nice meeting you guys. If you have any questions, please feel free to call me.
Thank you.
Hey guys, how's it
Hey,
going?
hey, let me go open the door for the lady here. You know how she gets, you know. All right.
Well, good to see you guys. This is what we got here.
All right.
All right, guys. Here's what we got for $100,000.
$100,000 house.
$100,000. I know it's a manufactured home, but it's a big lot. You know, it's 4 bedrooms, 2 baths. You know, for your $100,000 budget.
Oh man,
this is what you get. What do you
800.
think?
You know, so you're telling me we can have this house for $800 a month?
$800 a month.
Okay, I'm liking it.
And this is on your conservative program now. You said you wanted that 30-year fixed rate. You weren't sure about the adjustable rate and the funky loans, but this is what you get.
Okay.
She's not happy, I can tell.
And she knows she is not
I'm
happy.
not about paying $800 a month for something that you can pull away at any minute.
I agree.
Okay. So you know.
I mean, look at they haven't even taken care of the place.
Yeah.
But
I haven't even
$800 a month.
It doesn't matter.
Look,
okay.
I knew she wouldn't like it.
If you're gonna pay $800 a month, why would you want something you're not happy with?
I got something else lined up for you guys. I knew she wouldn't like it.
Thank you.
Come look at this other house I want to show you, and you know, you can make a decision from there.
But okay. Let's go look at the other house.
I'll show you one more.
Make you happy here, okay?
Hey, man.
Hi, how are you
Good
doing?
to see you.
Good to see you too.
What's going on at Bank of America?
Oh, wow. We reached the threshold for $100 million in our mortgages. And we're ready to get them secured so we can sell them out there in the open market.
Awesome. You know, this is what, the 5th deal we've done with you guys?
Yes.
You know, there's some concern that we've got. You've got $100 million. Tell me about, I mean, the market's starting to get a little shaky. We've been doing this for a while.
Usually, you know, in the beginning, they was awesome, but now since everything, the credit worthiness is not as good. But, you know, we're all making money off of this deal, so, you know, it's...
Okay, well, speaking of making money, I mean, we need to talk about the points. I mean, last time you paid us $1.5, so, you know, we made $1.5 million off the deal. It was pretty decent because we flipped it pretty quick.
Yes.
But we're starting to get worried about our reputation as a brokerage house and representing the securities in the market. For us to put our name out there, you know, we're going to need another point and a half. So we're looking at 2.5 to 3 points off of this just to really put this on the market for you.
Okay, well, right now, that wouldn't be the issue, but I would have to come back with you, go back to the office and redo some more paperwork and stuff.
What do you think? Do you think we're going to be able to make it happen?
We probably could.
Yeah, because I know your fees have gone up. I know.
Yes, a whole lot. Yes.
Yeah, you guys are making some serious cash up for this.
But in the end, we'll all be making money. And
well, we also have to look out for our investors. But I think that off the top of my head, we've got a couple of houses that I think we'll buy into this pretty quick because they're making money off of it. They're breaking them up and repackaging, and there's all kinds of stuff. So, you know, no one really knows what's going on because everybody's doing something different. But okay, well, let's do that. Let's see if we can get that number up to 3.
Okay, wow.
And we'll talk next week, and if we can get that, okay, if we can get that investment up, then we'll definitely put this out for you. Okay? Hey, good. Thanks.
this one.
Control yourself. Control yourself. Control
All right,
yourself.
now.
Control yourself.
You want the manufactured home, or do you want something like this?
Oh, look at the legs.
Look at that.
Let's go look at it.
Oh my goodness. Oh my goodness.
All right, $800 a month. Yeah, it's an adjustable rate loan. Interest only for 2 years. But look, it gives you 2 years at $800 a month. You're going to get some promotions. Your income's going to be better. You know, in the meantime, your home value is just going to be booming. You know, don't worry about the value of the house, the cost of the house.
800,000. Okay, wait a minute.
How much a month?
800. I can give you $800.
Guaranteed for 2 years.
Oh wow.
Now, after that, you can refinance, you know, cash out some equity. You'll be in good shape.
Okay, so how many bedrooms?
6 bedrooms, 4 bathrooms, lakefront, huge back deck, entertaining room, movie theater.
We can't put your parents on the other side of the house.
The works.
That's a perk.
And look at the Japanese maple. Do you know how much I love Japanese maple?
Oh my goodness.
And look at
Y'all want to check it out?
Yeah.
$800 for all of this house.
$800 a month.
Gorgeous.
Oh man. Do you really want this house? Oh man, she really.
So is this the one?
Okay, she really wants this house.
All right, good. We'll make it happen. I'm going to get on the phone. We'll go back right up and offer. I'll get on the phone with the home inspector. We'll get that scheduled. We'll get the appraisal lined up. And before you know it, you'll be moving in.
How fast can we start putting stuff in here?
Yeah.
I'd say about 3 weeks.
3 weeks? Oh my goodness. Okay.
Yep.
All right. All right. Come on, girl.
This is so awesome. My goodness.
How are you doing today, Michael?
I'm doing fine. How about you?
I'm doing well. I have this couple. They're interested in purchasing a $250,000 house on Livingsworth Street. I need for you to bump it up to $50,000. Bank of America would really appreciate it, you know, if you could do this for us.
That's a 20% increase. I'm not exactly sure how I can do that.
Well, Michael, you are the appraiser. I'm pretty sure, you know, there's a way that you can bump up the price on the house. Or we could call Richard and Rich's appraisal services, you know. I can give them a call and see what they say.
I can drive out there and check it out later, see if I can't find anything to bump up the price a little bit more.
Well, could you give me a call in the next 24 hours to let me know exactly what's going on?
All right, will do.
Well, thank you again for coming to visit me.
All right, thank you.
Hey, Mike, what's going on? This is Taylor over at RE/MAX. Yeah, look, I got these new home buyers. Got them hooked on this house. Man, I need this deal. I need this paycheck. I need you to take it easy on me on this home inspection. We got some termites. We got some plumbing leaks. But look, make that report clean. I need to close this deal. You know, I'll keep you busy. I'll keep them coming to you. Great. Thanks a lot. Let me know when you're ready. Bye.
Okay, go ahead.
Hey Jennifer, it's Michael. I was looking up the paperwork and I saw that you had it only at $250,000. We can easily make this $300,000. It's got all the amenities. The master bedroom and master bath are all loaded. The kitchen's super nice. It's got garbage disposal. The kitchen and master bedroom and bathroom are all handcrafted. They're very nice. The amenities are top quality. And $250,000 is what you have listed here. We can easily make it $300,000. I thought $285,000 would be good. And $300,000 might be slightly above, but in a few years' time it doesn't matter. It'll be $375,000 in 5 years. And they could make a nice cash payout later. So is there anything else I can help you with? Thank you.
Remax, this is Taylor. Yeah, hey Jennifer, how's it going? Heard we had the appraisal ordered. I know we were tight on that. How'd it come back? Oh man, that's awesome. I can't believe you got them to budget that much. I called Mike, the home inspector, too. Had him work his magic for us, so we're in good. We're ready to close this deal, make some money. I appreciate your business. Yeah, thanks a lot. Let's just get these folks in and worry about how they're going to pay for it later. All right, look forward to the next one. Thanks a lot.
Okay.
Hey Josh, how's it going? It's Taylor over at Remax. Oh good, yeah, guess what? I just heard from Jennifer over at Bank of America. We got you through. Appraisal came back good. Value's great. You guys are coming into some equity. Mike, the home inspector, had a great report, so you know we're ready to close this deal. Oh no, don't worry about that. You know, we got you in this payment. It's an interest-only adjustable rate, so keep your payments low for a couple of years. Don't worry about what happened later. We got you covered. You know, you'll get some job promotions, more income. Your home value be increased. You know, we're investing in your future, so don't worry about it. You guys are making a good decision. Let's just get this deal closed and get you moved in. All right, great. See you later. Thanks. Today's the day. You ready?
I'm so intensely excited.
We're getting a house.
Getting the house today. If she's happy, I'm happy. You know.
It's only been 3 weeks since we got the letter. I can't believe we're already closing
I
on the house.
this is like boom, boom, boom.
Yeah,
like.
Yeah. You guys plan on moving this weekend?
We plan on moving this weekend. We're gonna have the guys over for the game, and we're gonna ask them to help us move in while everybody's there.
Hey guys.
Hey, how are you?
Sorry I took so long. I had to put a little paper together for us here. I want to give you one of my cards so you know who you talk to.
A little?
So, it's a big day.
This is the big day.
So we're going to close on your house today. Congratulations.
So apparently, according to you, we're just a few signatures away.
Just a couple.
American dream is in our hands.
It is.
Seems a little more than a few.
Well, you know, there's a few rules and regulations, but it's nothing that you really have to worry about today. You can read it after you sign up.
Oh, so we get copies?
Oh, yeah.
I'll make certified copies for you.
Yeah.
Okay, so
do you have any questions before we get started?
I do.
I'm wondering about the payments.
The payment.
Still, we're kind of we're still confused
the
about
adjusting mortgage balloon.
I'm the attorney. I thought you guys already had this settled.
Yeah, we got you covered. Payments are what she quoted you, $800 a month for 2 years. You're in good shape.
So, do you know what the rate is going to go to, or how do we figure that out? As after the 2 years.
Well, we'll be sending you a letter within the next 6 months, but it won't be higher than maybe a few percentage points. So you have nothing to worry about.
So we're fine. So we can sign away, move in, have to look out.
Yeah, you're good. We got you covered. Housing market booming, your values appreciating. You know, like we said, this is an investment in your future. Don't worry about payments now.
Okay, well let's give them some pens and let's get going.
Thank you.
These are my debt ceiling pins, and they will lead you into happiness.
Oh man.
7 kids, here we come.
Okay, first of all, we're going to have a signature to show that you are who you say you are. And then I'm just going to figure it out from there.
Oh!
Congratulations.
Thank you very much. Thank you very much. There you go, baby. Go over there. Go over there.
Got my check?
When's my next couple coming in? Because I
Yeah, we got it.
2003. Fannie Mae and Freddie Mac buy $81 billion in subprime securities. December of 2003. President Bush signs the American Dream Down Payment Act to be implemented under the Department of Housing and Urban Development. The goal was to provide a maximum down payment assistance grant of either $10,000 or 6% of the purchase price of the home, whichever was greater. In addition, the Bush administration committed to reforming the home buying process that would lower closing costs by approximately $700 per loan. It was said it would further stimulate homeownership for all Americans. 2004. HUD increased Fannie Mae and Freddie Mac affordable housing goals for the next 4 years from 50% to 56%, stating they lagged behind the private market. From 2004 to 2006, they purchased $434 billion in securities backed by subprime loans. 2005, United States housing market correction, bubble bursting. September 2005, the Federal Deposit Insurance Corporation, Federal Reserve, and the Office of the Comptroller of the Currency allow loosening of the Community Reinvestment Act requirements for small banks, further cutting subprime. Fall of 2005. Booming housing market halts abruptly. From the fourth quarter of 2005 to the first quarter of 2006, median prices nationwide dropped off 3.3%. Year end, a total of 846,982 properties were in some stag of foreclosure in 2005. 2006, continued market slowdown. Prices are flat, home sales fall, resulting in inventory buildup. U.S. home construction index is down over 40% as a mid-August 2006 compared to a year earlier. A total of 1,259,118 foreclosures were filed during the year, up 42% from 2005. 2007, February 2007, subprime mortgage financial crisis, subprime industry collapse. More than 25 subprime lenders declaring bankruptcy, announcing significant losses or putting themselves up for sale. April of 2007, New Century Financial, largest U.S. subprime lender, files for Chapter 11 bankruptcy. July of 2007, Dow Jones Industrial Average closes above 14,000 for the first time in its history. August of 2007, worldwide credit crunch as a subprime mortgage-backed securities are discovered in portfolios of banks and hedge funds around the world. The Bank of China, many lenders stop offering home equity loans and stated income loans. Federal Reserve injects about $1 billion into the money supply for banks to borrow at a low rate. August 2007, American Home Mortgage files for Chapter 11 bankruptcy. August 2007, Democratic presidential front-runner Hillary Clinton proposes a $1 billion bailout fund to help homeowners at risk of foreclosure. August 2007, Countrywide Financial Corporation, the biggest U.S. mortgage lender, narrowly avoids bankruptcy by taking out an emergency loan of $11 billion from a group of banks. August 2007, Federal Reserve lowers the discount rate by 50 basis points to 5.75% from 6.25%. August 2007, President Bush announces a limited bailout of U.S. homeowners unable to pay the rising cost of their debts. AmeriQuest, once the largest subprime leader in the U.S., goes out of business. September 2007, Fed Economic Symposium in Jackson Hole, Wyoming, addressed the housing recession that jeopardizes U.S. growth. Several critics argued that the Fed should use regulation and interest rates to prevent asset price bubbles, blamed former Fed Chairman Alan Greenspan's low interest rate policies for stoking the U.S. housing boom and subsequent bust. And a Yale University economist, Robert Schiller, warned of possible home price declines of 50%. September 2007, former federal chairman Alan Greenspan said, "We had a bubble in housing," and warns of large double-digit declines in home values, larger than most people expect. September 2007, the Fed lowers interest rates by 0.5% to 4.7% in an attempt to limit damage to the economy from the housing and credit crisis. September 2007, television finance personality Jim Cramer warns Americans on the Today Show, "Don't you dare buy a house, you'll lose money," causing a furor among realtors. September 2007, affected by the spiraling mortgage and credit crisis, internet banking pioneer NetBank goes bankrupt. NetBank Inc. was the largest savings and loan failure since the tail end of the savings and loan crisis in the early 1990s. And the Swiss bank UBS announced that it lost $690 million in the third quarter. September 2007, prices fell 4.9% from September 2006 in 20 large metropolitan areas, according to the Standard & Poor's Case-Shiller indexes. This is the 9th straight month prices have fallen. October 2007, Prices fell 6.1% from October 2006 in 20 large metropolitan areas according to Standard & Poor's Case-Shiller indexes. This is the 10th straight month prices have fallen. December 2007. Standard & Poor's indexes of housing prices in 20 large metropolitan areas for 2007 is released, showing that for the 10th straight month prices have fallen, but the most worry is that the decline in home prices accelerated and spread to more regions of the country in October. December 2007. Standard & Poor's indexes of housing prices in 20 large metropolitan areas for October 2007 is released, showing that for the 10th straight month prices have fallen, but most are worrying that the decline in home prices accelerated and spread to more regions in the country in October. Since their peak in July of 2006, home prices in the 20 regions have dropped 6.6%. Economists' predictions of the total amount of home price declines from the bubble's peak range from the moderate 10 to 15% to larger 30 to 50% price declines in some areas. The year end, a total of 2,203,295 foreclosures were filed on 1,285,873 properties during the year, up to 75% from 2006. More than 1% of all households were in some stage of foreclosure during 2007, up from 0.58% in 2006. Year end of 2009, a total of 3,957,643 foreclosures were filed on 2,824,674 properties during the year, up 21% from 2008. More than 2.21% of all households were in the same stage of foreclosure during 2009, which is up from 1.84% in 2008. Year end of 2010, a total of 3,825,637 foreclosures were filed on 2,871,891 properties during 2010, up nearly 2% from the previous year. More than 2.23% of all households were in the same stage of foreclosure during 2010. Year end of 2011, a total of 1,887,777 properties received foreclosure notices during the year, down 34% from last year. 1.45% of all households were in the same stage of foreclosure during 2011, compared to 2.23% in 2010. Mid-year of 2012, a total of 1,045,801 properties received foreclosure notices during the first half of the year, a 2% increase over the previous 6 months, but down 11% from the same period in 2011. 0.79% of all households were in the same stage of foreclosure during the first half of 2012.
It's not a bad idea.
I don't like you having the rights over these videos.
We all need a release waiver form.
Yes.
Okay, say something.
Thank you for your time.
Thank you.
Appreciate it. Hope you enjoyed it. Bye-bye.
Don't go buy a house with 7 kids.
Oh, see, we'll have bloopers during the credits.
Oh, no.
And all you hear is
Redo. Oh my God. Redo. Oh my Lord.
Run, 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 run.